Rahim, distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullah, and a very good morning, afternoon, and evening to all of you. On behalf of the General Council for Islamic Banks and Financial Institutions, I have the pleasure and honor of welcoming all of you to this webinar on CIBAFI Sustainability Guide, Enabling Sustainability Integration in Islamic Banking Sector. Ladies and gentlemen, the emphasis on sustainability integration within the financial sector is growing, particularly in light of the growing environmental and social challenges confronting global societies. This situation has compelled policymakers and regulators to make the financial system more responsible towards societies and the environment incorporating sustainable practices. Recognizing these developments and growing interest in sustainability practices within the Islamic financial sector, CIBAFI took the lead and developed a comprehensive sustainability guide for Islamic financial institutions. This webinar will shed light on the structure and key components of the sustainability guide, followed by an interactive panel discussion with experts in the industry. Ladies and gentlemen, to start off with the webinar, I have the pleasure to call upon Dr. Abdullah Belatik, Secretary General of CIBAFI, to deliver his welcoming remarks. Dr. Belatik, the cloud is yours.
Thank you, Mohammed. Bismillah ar-Rahman ar-Rahim. Wassalatu wassalamu ala Maulana Rasulillah wa ala alihi wa sahbihi ajma'in. Assalamu alaikum. Good morning, good afternoon, good evening to all of you, wherever you are. On behalf of CIBAFI, we have the great pleasure of welcoming you to this, to the launch of CIBAFI Sustainability Guide for Islamic banks. I mean, for the last 2 years, everyone started realizing something which globally there was a start of it over 10 years ago, is on the importance of sustainability and the issues related to climate change that affect all of us and will be affecting all of us more and more. Realizing this change, this global change and trend, CIBAFI for the last 6-7 years has been doing a number of initiatives to address the challenges related to sustainability through a partnership with the other stakeholders and global organizations, and raising awareness among CIBAFI members and stakeholders on the importance of these issues. What we have realized during our first research and surveys, that the sustainability within the Islamic banking and finance is a core principle, and there is a clear convergence in principles between sustainability and Sharia objectives or maqasid al-Sharia. But on the other hand, we realized through discussions with our members and stakeholders on the difficulty to make it a systematic way inside the operations of the Islamic banks. So meaning realizing it is important, but in the same time, there are some difficulties at some times, especially in the measurements and the implementation parts, to make it as a part of the business operations of the Islamic banks, and not only as part of the social responsibility of the Islamic banking and Islamic financial institutions. So realizing this, we have established 2 years ago our sustainability working group, working with leading experts globally and with our member banks to see how we can address this. And from there, we designed a roadmap to address this problem. First is to start with a guide, how to implement sustainability, how to define sustainability within Islamic banking context, and how to have the process for its implementation. And this, after 18 to 24 months of work, we are now coming to delivering this sustainability guide, which will be launched during our annual meetings now. Realizing again on this, and the roadmap include many other projects that are interrelated and will be complementing our work on sustainability. Some of the projects that are upcoming include having a measurement methodology for carbon footprints of Islamic banking portfolios, which will complement in a way the sustainability guide in coming up with some benchmarks and scorecards for the implementation. Other work will follow as well, include coming up with a comprehensive guide for product developments to ensure the products that are not being sustainability compliance or sustainability, but have integration of sustainability inside the process of developing products. These are all challenging projects, of course, but we are very pleased and happy to have a wide range of stakeholders supporting us in this, from the members of from other international organizations with whom we are working. The other areas that we have started, as we all know and we realized with the COVID-19 situation and pandemic that have impacted all of us in different ways, we have realized the importance of digitalization and digital transformation. So this is another project we are working on as well, and we will be coming up with some other guides and documents that will support the Islamic banks in their journey for digital transformation. So during these annual meetings this year, which we are holding both virtual for those that could not join us and in presence for those that could come to Medina in the Kingdom of Saudi Arabia, we are addressing a number of issues that we consider are in the high agenda of the Islamic banks, or they should be. And everyone is realizing the importance of these problems. So we are very pleased and happy to have today a great panel of speakers and experts that will be sharing with us at various levels and angles the importance of sustainability that we all know, but more importantly also on how to go with it in practice, how to implement it. So this will be a first step towards this long journey. So we count, of course, again, on all our members and stakeholders to support this implementation process through with the help of the working groups members and all other stakeholders that are supporting us in this journey. So with this, I would like to thank all the speakers and the experts that are helping us on this through various throughout the last 2 years on this process. We thank you very much, and we like to thank our board of directors and all other members for their support for these initiatives. Thank you.
Thank you, Dr. Beladik. Ladies and gentlemen, we will now have a presentation on the CIBAFI Sustainability Guide, and I have the pleasure to share the structure and the key components of the Sustainability Guide. All right. So basically in this presentation, I will be broadly discussing some of the main points, the background, the rationale of the Sustainability Guide, the methodology, Sustainability Guide implementation process, and lastly, the 5 principles of sustainability. To start with the background, this Sustainability Guide is a part of many initiatives which we have taken in the last couple of years, as was explained by Dr. Beladik, the Secretary General. In 2019, we developed a CIBAFI strategy plan for the period of 2019 and 2022. And this strategic plan was focused on reinforcing the value proposition of Islamic finance, and also promoting sustainability and responsible business practices within the Islamic financial services industry, and as well as to address the real concerns and challenges which our Islamic finance industry is facing nowadays. In the same years, CIBAFI established a SWG working group, and this Sustainability Guide is one of the projects under the same working group, and with the objective to enhance the environmental, social, and governance principles of the Islamic financial institution. And this guide is prepared by the CIBAFI research team, and during the development, the guide has gone through with the various stages. For example, for consultations, we have organized a roundtable meeting and invited sustainability experts from different international leading institutions that are also advocating sustainability practices. Similarly, we have also conducted in-depth interviews with the Sharia scholars, and also industry leaders, so that we can learn from their experiences in relation to sustainability and other related practices. And of course, these consultation processes really help us to further improve our sustainability guide. Rationale for the sustainability guide. As we know that banks and financial institutions, they play a very crucial and important role in economic development in any country. And through their financing, credit and investment activities, they directly shape production and consumption in an economy. And therefore, they also create positive and sometimes negative effects on the society or on our environment, economy through various channels. Global mobilization of the sea for climate change and sustainable development is another important point. And the last few years, we have seen there is a growing awareness around the world on social responsible investment, ESG financing, and other related products and services. And there is a shift, I would say, towards alternative investment and financing mode. And that is the reason for increasing stakeholders' expectations across, you can see that SRI and also ESG space. COVID-19 is another very important factors. We all know that it has really accelerated the discussions on sustainable development around the world. So therefore, it is important we believe that bank they should include this in their decision-making process and also should adopt the sustainable development objectives. This is, in fact, also the case for Islamic banks, which are under Islamic principles or then Maqasid al-Sharia methodology. And we expect that they will operate within the sustainable development paradigm. And for this, Islamic paradigm provides a substantive rationale to why sustainable development must be integrated and it should be embedded in the operations. The banking operations, the product development process, for instance, businesses and financing activities of Islamic banks. Now, for this integration into Islamic banks, they have to develop necessary capacities and also capabilities to integrate sustainable development that also include climate and other environmental issues. Moving to the methodology, we believe that Islamic methodology can be explained through Maqasid al-Sharia, which are understood as well-being not only for human beings, but also for other stakeholders in this world. So for this, we have developed ESG augmented Maqasid al-Sharia evaluation framework, which basically provide a structure to operationalize ESG within Islamic logic for Islamic banks. The rationale for this is to correlation between the Maqasid al-Sharia and also the ESG logic. And because ESG alone, if you see that it's purely an investment strategy, I would say, and it does not provide a broader sustainable base for Islamic banks. For instance, ESG does not cover the larger dimensions which we have in Maqasid consequences that also include the faith dimension. So therefore, ESG can be instrumental in this regard and the content of Maqasid Sharia for sustainability. ESG augmented Maqasid Sharia frame. This is the framework here because we see that there is a significant overlap between ESG categories. So we have summarized Maqasid goals in form of these categories, for example, human life, economic, environmental, societal, and also governance goals. And since we know that ESG has not been formulated to essentialize faith, so we have to incorporate this faith into this ESG as the main Maqasid goal. As we can see here, under this first category of value of human life, for instance. We will definitely have more discussions on the methodology part in our panel session. So we can move to the definition of Islamic sustainable development. This is the definition which CIBAFI Sustainability Guide is providing for Islamic financial institutions. So I will not read out there. Move to the sustainability guide implementation process. It has been divided into 5 stages, as we can see here. Starting from the internal assessment of sustainability focus area. This is the stage where Islamic banks can refer to their national development plans, if there are any, or any national strategies, for instance, and any other important sector which are focused by the government where the banks are operating. In the second stage, the bank should align its vision, mission, and strategy with the focus area, which is defined in the stage 1. And the third stage is on the operational integration, and the fourth stage is on, I can see that internal and external education. We believe that this is also very important because for a smooth implementation of the principles of sustainability, a bank should have trained employees and also can focus to educate their customer base so that they can understand the significance and importance of sustainability. Here we have a list of 5 principles as part of the sustainability guide, starting from sustainability integration. Then we have sustainability governance. The third principle is on environmental and social sustainability risk management. And fourth is on monitoring, report, and communication. And lastly, we have coordination and collaboration. We'll see that the principle 1, sustainability integration. Basically, under this principle, we have developed a top-to-down approach for sustainability integration in Islamic banking business activities that basically start with the bank's strategy at the first place, and then provide guidance on other areas like resource management. We have SOPs, capacity enhancement, and lastly, the business activities. For instance, if we talk about the integration sustainability in banking strategy, we have these 5 steps, starting with establishing a corporate vision that drives the sustainability within the bank, followed by this setting strategic SMART goals to implement sustainability objectives. The third is develop strategies for addressing sustainability issues, followed by set measurable KPIs and targets. And then lastly, monitoring and assessing the impact of the sustainability integration. Here, along with the traditional credit analysis, the bank can also incorporate sustainability consideration in the credit analysis process. They can conduct the ESG performance analysis at the time when they are making their decisions on investment and financing of products and services. Second principle is on sustainability governance, and for as another an effective sustainability governance, Islamic banks can structure their existing corporate governance model, which is now we see that develop around the institutional logic of the existing system. So, which means that they have to move away from the shareholder value maximization model, which they have adopted now, to a more broader concept of stakeholder governance. It is because to embed the sustainable development, banks, they required the recognition of the extended stakeholders and the developing, they can develop a structural relationship with their customer base. And this is also requires input into the Sharia governance, and also, as you can see in the model, audit, risk, and credit committees. Further, to coordinate the sustainable development priorities in line with ESG augmented Maqasid Sharia framework, sustainability committee must be incorporated into the sustainability governance framework, as we can see here. Right. Next is principle. Principle 3, which is environmental and social sustainability risk management. So both these two areas, environmental and social sustainability, we believe it's very important, essential consequence expect to be delivered by Islamic banks. In order to apply this principle, a bank should integrate the ESG risk in the existing risk management framework. Banks should also develop a clear understanding of environmental and social risks associated with its financing and investment activities. And lastly, assessing the potential impacts of identified environmental and social risks. Okay, these 5 steps will help banks to adopt an integrated approach for both environmental and social risk management. Moving to this principle number 4, which is monitoring, reporting, and communication. So in the development of measuring, monitoring, and reporting tools, they can enhance the credibility of a bank in terms of sustainability integration. So basically, the objective of this principle is to measure how banks and how they should have positive impact by deploying their capital and resources in the economy. So sustainability disclosure should be divided into 5 sections according to the integrated approach and incorporating these principles. We have discussed these 5 steps previously in the first principles. We are not going to repeat it here. All right, so in this impact assessment process for financing and investment, the CN is also divided into 5 stages, starting with the screening process, which determine whether the investment or finance decision needs an environmental and social impact assessment. A second stage is of initial assessment that basically determine both positive and negative social environmental results or consequences. A third is on the mitigation, which follows by the monitoring, where you can see the bank carry out monitoring activities related to environmental and also social impact. And lastly, we have reviewing of the social and environmental impact after the financing or investment decision is executed. The last principle is on the coordination and collaborations. This principle basically provides guidance on coordination and collaboration activities that bank can, these activities can help the banks to accelerate sustainability integration into their business activities and operations. In order to implement this principle, we propose that banks should commit to relevant international standards and best practice initiatives to accelerate the contribution of Islamic financial industries to sustainability. And also banks should support and participate CIBAFI sustainability initiative to promote sustainability integration in Islamic financial industry. Further, banks should also collaborate with other Islamic financial institutions in their region, in the country, locally, and also internationally to further implement these principles. And further, we have also suggested to contribute, the banks, they should contribute to stakeholders engagement and dialogue on sustainability related issues and various initiatives. Bank can also collaborate with the key international stakeholders. For example, we have IFE, IFM, or IFSP. Bank can also encourage other important stakeholders, for example, their customer base, and if they have a local government and agencies which are promoting sustainability practices, and then we have non-profit organizations, for instance, and other local communities. This is all from our side on the sustainability guide, and I hope that we were able to provide you an overview of the sustainability guide. And of course, for details, you can refer to the guide once it is available after the official launch. Right, so ladies and gentlemen, without further ado, we will now move to the panel session. And for that, I would like to invite the session moderator, Dr. Dalal Asuli, to please moderate the session. Dr. Dalal is Assistant Professor and Program Coordinator at College of Islamic Studies, Hamad bin Khalifa University, Qatar. Dr. Dalal, the cloud is yours.
Thank you, Dr. Mohammed. And ladies and gentlemen, good morning, my time from Doha. Good afternoon and good evening for our dear participants and panelists. And Assalamu alaikum. It gives me a really great pleasure to participate in this session, the inaugural session for the CIBAFI Sustainability Guide for Islamic Banks. It is really one of the milestones, I believe, for the Islamic financial industry, which, as Dr. Abdelia mentioned, is the outcome of a project that was initiated 2 years ago. And I'm very happy to see it materializing today, and hopefully it will open the door for more great initiatives in this area in the future. It is also one of the, as I mentioned, major achievements for the Islamic financial industry, since it will provide a framework for Islamic banks to integrate sustainability. Although we've seen that the global mobilization in the financial industry has started years ago with a variety of initiatives, either at national level or institutional level, or even targeting specific segments within the the financial industry in general. And one of the major points or major considerations is this global mobilization for sustainable development and to mitigate the various global challenges, including climate change and, of course, achieving sustainable development in general. So the financial sector has a major responsibility and role into redirecting funds for sustainable development and therefore to promote the well-being of the societies and the communities. And having a guide in place is very critical to promote a variety of things. Number one, which I believe is collaboration and sharing best practices among the institutions. And number two, of course, of harmonizing and providing more guidance for the institutions to integrate sustainability in a more integrated approach rather than, as a standalone objective within specific bank activities. In this session, of course, we're aiming to further discuss about the guides and the relevance of sustainability in general for the Islamic financial industry, and how actually this guide will enable sustainability integration in the Islamic banking sector. And I have the pleasure to have with me 5 distinguished speakers in this panel session, who actually will be sharing their perspectives from the global level, but also in the context of the Islamic financial industry, on of course, the importance of enabling sustainability integration with the implementation of a guide for Islamic banks. The first panelist is Mr. Peter Casey, who is a consultant at the General Council for Islamic Banks and Financial Institutions. And the second panelist is Professor Dr. Mehmet Asutai, who is a professor of Middle Eastern and Islamic political economy and finance at Durham University Business School at the United Kingdom. And our third panelist will be Dr. Muhammad Al-Yami, who is the Director of Development Effectiveness Department in Islamic Corporation of the Development of the Private Sector, ICD, Saudi Arabia. And our fourth panelist will be Dr. Adriana Kokornik-Mina, who is a Metrics and Research Senior Manager at the Global Alliance for Banking on Values in the Netherlands. And finally, we have Professor Dr. Muhammad Akram, who is an Executive Director at the International Sharia Research Academy for Islamic Finance, ISRA, in Malaysia. Welcome, dear panelists. It's a pleasure again interacting with you in this panel session on this major topic in this holy month of Ramadan, which is sustainability. Let me start with Mr. Peter Casey. Of course, in the introduction of this session and also the presentation about the guide, we spoke about, the importance of sustainability and then the global relevance of the topic for the global financial industry. Now, we have seen several countries globally promoting sustainability integration in the financial sector. And this, of course, impacts the regulatory development and financial services legislation in the financial sector in relation to sustainability, responsible finance, and practices in general. Can you tell us more about some of these trends in the regulatory landscape and where the Islamic financial services industry stands in today?
Okay, I will try. If I tried to do that comprehensively, I think we'd all still be here at Eid. I counted over 20 fully international initiatives on sustainability and its application to the financial sector. And that's before you look at regional and national initiatives. And certainly if I'd been talking a year ago, I would be saying, if anything, there are really rather too many of these. Some of them were coming out of bodies you might expect, like the UN Environmental Programme and its Principles for Responsible Banking. A number of them were coming out of private sector or semi-private sector organizations, some of them set up for the purpose, and I could mention, say, the Sustainability Accounting Standards Board. Some of them were coming out of quite unexpected organizations. I was myself surprised to find that the ISO, which you normally think of as specifying things like electrical connectors, had actually produced 4 standards on sustainability. So there's a huge amount going on, not all of which I can describe. I guess one of the most significant public sector bodies, however, was the Task Force for Climate-Related Financial Disclosures, which was established by the Financial Stability Board, though largely run by the private sector. And that was done in 2015. Its recommendations have been quite influential, and a number of jurisdictions, including the EU, Brazil, Hong Kong, Japan, Singapore, have announced plans to require reporting in line with that task force's recommendations. Now, but there's been a really big change this year with the setting up of the International Sustainability Standards Board under the auspices of the IFRS Foundation. It's clear to me that that was heavily encouraged and I think driven by the G20, which has a sustainable finance working group, through also the FSB and IOSCO, who clearly took every opportunity to welcome this development. And that has absorbed, or is absorbing, some of the existing organizations. It's already absorbed, I think, the CDSB, Climate Disclosure Standards Board. It's in the process of absorbing the International Integrated Reporting Council and the Sustainability Accounting Standards Board. And it's clearly somewhere on the way to superseding the work of the Task Force for Climate-Related Financial Disclosures. So I think that is going to be the big player at full international level, but working first on climate rather than all sustainability, though it's expected to get there. Otherwise, if I look around the financial sector, again, you've got some specialist organizations, the Partnership for Carbon Accounting Financials, which was put together by about now 250 financial institutions. There's the International Capital Markets Association, which produced the Green Bond Principles. I guess if I look particularly at the conventional standard setters, the Basel Committee was a bit slow off the mark. Well, I can guess some reasons for that, but they're largely political. What it has done is set up some principles for the effective management and supervision of climate-related financial risks. But note that's in different territory from what we're doing. It's fundamentally, what do the climate-related risks do to the banks, their investments, maybe their physical operations, rather than what do the banks do to the climate through the way they run their businesses, invest, and so on. In other sectors, IOSCO has done a fair amount of work on sustainability, but is clearly moving towards reliance on the new ISSB. The IAIS on the insurance side has done an issues paper on implementing the task force recommendations. I could pick up a couple of others. I've already talked for long enough. Perhaps I can return to both what's going on in the Islamic finance world and maybe some national initiatives a little later.
Thank you, Mr. Casey. This is very interesting, and it goes to say actually that it's a multi-stakeholder responsibility, and that's what we've noticed in the conventional industry, and we're hoping to create the same actually commitment or contribution in the Islamic financial industry, with CIBAFI starting, the path, and hopefully others will join. And exactly as you mentioned, it started with sometimes institutional initiatives in the conventional markets, and then now we see standard setting bodies also in the conventional industry trying to harmonize and standardize all of these guidelines. Now, specifically talking about the Islamic financial industry and why do we need specifically a guide for Islamic banks? Why can't we just use whatever is existing? One of the simple reasons is actually that Islamic banks have specific features that distinguishes them from conventional institutions. And therefore, in terms of integrating sustainability, that needs to also be taken into consideration for any guidelines that need to be developed. And from what we've seen in the earlier presentation is that one of the major sections of the guide is the methodology and how this guide was developed. and which includes actually references to the principles of Islamic law or maqasid al-sharia, and that's one of the I would say the major features, or the underlying principles of the whole, Islamic financial industry. So now let me move to Professor Mehmet Asutai to tell us more about the methodology of the guide and how it can be used as a reference, by Islamic banks to implement the guide, and what makes it unique as compared to any other existing sustainability guidance and manuals.
Thank you very much, Dr. Dalla. Assalamu alaikum to everyone, and have a good day wherever you are. It is good to be here and to see that the guide has come to a certain level now. Indeed, I think Peter, in a way, responded to the question by looking at the materiality issue. When we look at the sustainability debate in the last 10 years, at least, the way it evolved, of course, going beyond how to manage the risk created by climate and other stakeholders, but moving into what impact the financial service is creating on the environment, as well as on the lives of other or the existence of other stakeholders. Therefore, that brings us the importance of materiality. And within that, of course, the whole philosophical understanding of what sustainability is, regardless of our faith or no faith background, one way or another, the main problem that we see around us with the sustainability issue as well is the still the hegemonic nature of considering the produced resource, that is capital and finance, on the others. Still, when we look at the documents issued on sustainability, still the dominance and the presence of finance and capital over the other stakeholders. Therefore, we are still within the existing paradigm. And that is the right-based paradigm, the philosophical paradigm. In other words, the right is allocated to hegemonic, and therefore, because financial world now is the dominant sector, and therefore it is the right of the financial sector. And then we have to look into how we can moderate the consequences of the financial sector. So moderation of the consequences has been the methodological approach. This, unfortunately, has been taken as a process as well in the Islamic finance industry. However, with this document, we want to go back to the main fundamental issue. And this is not only this document, of course, we have seen Pope Francis have come up with the same philosophical foundations in responding to environmental issues. In other words, shifting from right-based philosophical understanding to privilege-based understanding. And that makes the entire difference in the sustainability discourse in relation to what is available around us, which is the right-based understanding. In a way, implicitly, it came out in Peter's implicit criticism of the Basel's position, for instance. And therefore, within the privilege-based philosophical understanding, the domination of any stakeholders has to be considered within the existence of other stakeholders, and therefore aiming to establish an equilibrium between different stakeholders and treating every stakeholders, including, of course, environment and climate issues, in an equal footing. So rather than suggesting how financial institutions can continue to maximize their returns by mitigating the risks created by climate, no, how climate realities has to be essentialized in the decision making. So the causality is running. And that's very much the privilege-based philosophical understanding to make a distinction. And that philosophical position, I think it is coming out clearly in this guide. Hopefully it can be located by the different stakeholders around us operating, but importantly, of course, by the Islamic finance industry. Of course, when it comes to the methodological part, or in other words, how to articulate that privilege-based understanding, Maqasid al-Sharia remains an important methodological framework. However, again, when we look at the general application of Maqasid al-Sharia, it remains the understanding, the common understanding is based on, again, right-based understanding. With this document, we want to bring that the privilege-based understanding within the Maqasid al-Sharia debate, and therefore open up the methodological framework to essentialize the interests of the other stakeholders, and therefore working towards that equilibrium as much as possible between different stakeholders, or at least considering the interests of other stakeholders in the decision-making process, and hence materiality, causality running from other stakeholders, including environment, of course, towards financial institutions. So that has been the main essential contribution of this document. But Maqasid al-Sharia, of course, the whole, what is the objective of Sharia? And that is interpreted heavily human and the well-being of humans and other stakeholders. And therefore, whatever the decision, whatever the action, whatever the transaction we have, has to produce some certain well-beings as a consequence in the process for human as well as the other stakeholders, such as environment, land, and climate, and etc., the other people and the society. So that distinction, again, articulating this privilege-based understanding through Maqasid al-Sharia and linking those rather than the right-based understanding as has been prevailing in the Islamic finance industry, but to the consequences, and therefore articulating the consequences and taking the consequences into the decision-making framework, as we are suggesting in this guide, is an important distinction to be considered. In other words, rather than intention-based Maqasid al-Sharia, and that certain goods has to be intended, with this document, by referring to the privilege-based understanding, what we are saying that the consequences of the transactions have to be considered, and therefore establishing again an equilibrium between intention and the consequence, rather than just leaving everything to intention but ignoring the consequences. However, the major problem, the main problem, not major, but the main problem, sustainability, of course, are the consequences, which unfortunately Islamic finance industry has not considered so far, despite its original philosophy stemming from such ideals. And therefore, with this guide, that consequence part is internalized in the entire process to achieve sustainability and ensuring that all the stakeholders get their privileges within the whatever the consequences that are produced. I think I should stop here because, as Peter mentioned, there are plenty of discuss, but we have to be limited. Thank you.
Thank you very much, Professor Mohammed. And effectively, I think the methodology of the guide is very unique, actually, and caters for the specific features of Islamic financial institutions. And as you mentioned, actually, although that philosophical, foundation has been there for years, I think since the inception of the industry, the challenge was also how do we move from the, as you mentioned, the intention-based approach to the consequence-based approach. And that what makes actually this guide critical in terms of providing that integrated approach for integrating sustainability while also keeping, again, the philosophical foundations, which is actually the objectives of Islamic law, with the ultimate objective, of promoting good and preventing harm. And to build on this, let me move on to Professor Akram Naldin, actually, who is a Sharia scholar. And as we discussed, there always has been this focus on maqasid, and then, as foundation for the Islamic financial industry. And recently we have seen a lot of discussions talking about their alignment with sustainable development. Now, from your perspective, and as a Sharia scholar, how can this guide contribute to better integration of maqasid in the Islamic financial industry? And what current challenges do you see in this regard?
Thank you very much. Bismillah ar-Rahman ar-Rahim. Wassalatu wassalamu ala Rasulillah wa ala alihi wa sahbihi ajma'in. Dr. Abdulillah and also distinguished panelists. First of all, thank you very much for inviting me to this forum. And I would say that I would commend CIBAFI for coming up with this sustainability guide, in which I think it is really timely for us to come up with this kind of guide, especially with the pandemic, the global warming issues, as well as the financial issues that we are in now. Perhaps, I mean, it is timely and we need to focus on to look beyond, you see, what is today, what is going to happen to the future generation. And I believe that the focus should not be, I think, as mentioned by some of my colleagues, should not be focused. We should not be only focusing on maximizing the profit, but we need to look into people, planet as well when it comes to planning for the future. Now, I'm glad that when I look through this sustainability guide, especially when I go through the principle number 2 on the sustainability governance, you see, it is very interesting when the suggestion here is to integrate the sustainability agenda within the framework of the Sharia Committee and also Sharia Supervisory Board, in which, as it is now, Alhamdulillah, I would say that there are quite a number of work that has been done within the Sharia fraternity. In fact, I think the challenging part that we have at the moment is that to ensure the awareness of the Sharia scholars. In fact, there are several forums. I mean, we at ISRA, we have done several discussion with some of the Sharia scholars in order for us to get through, I mean, the sustainability agenda. And I think our focus is very much in a broader manner that is on the maqasid as a whole. Because from my understanding, when we talk about maqasid, it encompasses all, because we have ESG, we have SDG, we have SRI, VBI here in Malaysia, you see. I mean, all this is within the purview of the maqasid dimension from the Sharia point of view. Now, to a certain extent, I would say that the awareness is there. I remember, I mean, speaking to one of the researchers that is conducting research on this area, where she tried to gauge the view of the Sharia scholars on the sustainability. And I think the feedback that I got from him is that most, if not all, of the Sharia scholars, of course, I mean, they are agreeable that when we talk about sustainability agenda, it is within the purview of Sharia, except that there are some, I would say, view which says that whether is it I mean, this sustainability agenda should be, you see, within the purview of the Sharia Committee, Sharia Board at the institution, or it is within the purview of the regulator. I think there are certain debate on that, but I would very much like to see that when we talk about the sustainability agenda, it should be also become part and parcel of the processes within the Sharia decision-making process in the financial institution, especially. Now, take for example, at the moment, I think, I mean, being a Sharia scholar sitting on several Sharia committee, Sharia board at the regulatory level, as well as the financial institution level, at the moment, I would say that at the regulatory level, to a certain extent, in some jurisdiction in which I'm involved, I mean, there are certain discussion, you see, on the impact of a particular product that is being offered, which is being brought to the Sharia committee level. So, for example, I'm here in Malaysia, in the Sharia Advisory Council of Bank Negara Malaysia. So we do assess the product itself from the Sharia point of view, whether it fulfill all the conditions, all the requirement of Sharia, and over and above that, we do look into what is the impact of the product to a certain extent. But I would say that, I mean, the discussion is still at a preliminary level, in which, I mean, we really need a strong data, you see, from the Sharia point of view. For me, as a Sharia scholar, for example, for me to say that one particular product, okay, I mean, it satisfies all the fiqh or the legal requirement of Sharia. But if I want to go beyond that, to say that, okay, this product is non-compliant because it is, you know, it is detrimental to the environment, I can do that. But then I really need a strong data to prove, you see, beyond reasonable doubt that, yes, I mean, the impact is genuine and whatnot. So this is the challenging part, I would say that, you see, when it comes to integrating the sustainability agenda within the Sharia decision-making process. I mean, having said that, I believe that, you see, at the moment, we already have sufficient data. You see, almost 50 years of the industry in which we are in. You see, I always believe that we have the sufficient data and we can integrate. That is the reason why at ISRA now we are embarking on a project, you see, to come up with the Sharia framework on integrating maqasid within the Sharia decision-making process in the Islamic financial institution. I mean, we have discussion with Majma' Fiqh. We are going to have discussion with CIBAFI and some other stakeholders, inshallah. You see, in which, I mean, how can we bring this together, and hopefully in the future, when a Sharia scholar decide on a particular issue, they are not confining themselves to decide that, yes, I mean, this is, you see, in line with the legal Sharia requirement, but they have to go beyond that. And this will entail, of course, you see, the Sharia expert as well as the practitioners and also the market players, you see, together in the Sharia committee in order for us to decide and move forward on this. So I think perhaps, I mean, I will stop there for the time being, but I would say that it is timely for us to discuss this, and also for the Sharia scholars also to play their greater role, you see, in order to ensure that the sustainability agenda is being brought forward and is integrated within the Sharia decision framework. Thank you very much.
Thank you very much, Prof. Laldin, and I'm glad that you brought up the point about, you know, the support for the Sharia committee, although we know that the Sharia committee's decisions and role is very critical also to promote sustainability integration by, you know, Islamic banks. And if you look at the governance structure suggested in the guide, actually, the guide clearly emphasizes on the creation or the establishment of a sustainability committee that will provide an independent assessment of, you know, the sustainability related consequences of projects, financings, investments, or any other products. And these, of course, will be, again, provided to the Sharia committee for them to actually review or assess, you know, any transactions. And therefore, sustainability should be actually a key consideration in the Sharia review process. And of course, we look forward to the outcomes of the projects you mentioned, which should hopefully supplement, I mean, the work of the guide, and provide additional guidance, you know, for Sharia boards and scholars. Now, let me move to our next speaker. Let me move to Dr. Elyami, who is actually but has been part of the sustainability working group, you know, at the CIBAFI, and you have also witnessed the journey of developing this guide. So now we have the guide, and hopefully with this inaugural session, we're creating awareness around the guide, and there will be more in future. What is next after this guide, and how can Islamic financial institutions integrate actually sustainability principles in their business?
Thank you very much, Dr. Dalal. Assalamu alaikum wa rahmatullahi wa barakatuh. Well, first of all, I actually would like to congratulate CIBAFI, the Sustainable Working Group friends and the researcher for this achieving this milestone. It's really a happy day, alhamdulillah, to launch this sustainability guide. What's next is really a very tough question, because now we have work on this guide for 2 years. Would like to expand the awareness that there is a sustainability guide ready for the Islamic banks and also beyond to use and utilize. The next phase of this, inshallah, will include the Islamic financial institutions. But if we just look at how can we put this sustainability guide in place, is first of all from CIBAFI side is to identify champions that will be willing to apply and implement these guides, and from that champions we can draw some lessons learned, some success stories, and also some we'll identify even some challenges that need to be maybe addressed back either by the sustainability working group or any other venue. But let's take an example, an Islamic bank in X country, where that country for sure have its own nationally determined contribution, the National Development Plan, and also their plan to contribute to the Sustainable Development Goals. These are all a very high global national level of goals that need to be achieved for the prosperity of people all over the world. An institution, an Islamic bank, can first of all decide from the management level, because if you do not have the management commitment and belief, passion about sustainability, it will not, it will not go through, it will not fly within that bank. And I'm just taking an example of an ex-bank, it can be, all. So first of all, this institution need to identify what are the key areas that they can work on financially and from development point of view to contribute to the national plan, to the Sustainable Development Goals, to contribute to the environment, social, and governance. Then these commitments need to be cleared within the Islamic bank strategy. So strategy need to be set where it includes sustainability and development. Then that strategy will be turned into KPIs. It might be at the organizational level, but then it needs to be cascaded to all the levels of the institution. I'd like to maybe add to what Professor Laldin said when he was talking about the guide to be set within the Sharia committee. I think the guide needs to be set in all committees that involve in investments, risk committee, new product development committees, the Sharia committee, where this guide is one major component of the, I would say, maybe investment, and approval processes, because that will enhance the selection of project, that will enhance the selection criteria of the investments. And if we have a robust and proper procedures that use and utilize different guides, one of which is the sustainability guide that we are talking about today, that will definitely enhance the quality of the investments and of the business of that bank, Islamic bank, which will eventually contribute to all different type of sustainability metrics that we have. And also Peter mentioned that we already have, I think, four standards or four criteria that's globally used now. One more thing is to share this news about the sustainability guys. We need to go now public to the conferences, where we can talk about this guide. If we have concrete example of some institution that really applied this before, that would be great. Otherwise, we still can do similar session to this one, where people and institution will become more aware about the guide, and maybe we can convince those champions to maybe speed up the implementation of the guides, so we can have success story. I'm a big believer of story telling format. Even in Quran, Allah subhanahu wa ta'ala mentioned the al-qasas and many times in the Quran. So telling people the success by stories will be great. Another point which is crucial is to have the best possible monitoring and evaluation tools within the Islamic Bank, so we can track, monitor, and maybe identify challenges early on, and also enhance the sustainability guide in each particular institution. Because I think, and maybe the researcher can correct me if I'm wrong, but this guide meant to be flexible, so it can be adopted and tweaked a bit, maybe to fit the needs of every single institution. I'll stop here. Thank you very much.
Thank you very much, Dr. Al-Yami, for very well-articulated thoughts on the next steps. And effectively, I think what the guide provides at the beginning is actually an integrated approach in incorporating the principles, which also recognizes any existing initiatives with regards to sustainability integration by banks. And as you mentioned, it starts with the internal assessment of sustainability focus areas, taking into consideration any national priorities or strategies targeting sustainable development, and then move into the alignment with the bank's vision, mission, and strategy, to the operational integration, and then to the internal and external education, and finally to the monitoring and reporting. And as you rightly emphasized on the importance of awareness, I think this webinar actually starts that awareness process with the launch of the guide. But of course, the next steps, as you mentioned, would be to come up with best practices once, I think, Islamic banks start implementing the guide, compiling those case studies, and then best practices would hopefully supplement this guide and provide more, I think, examples for other institutions that will later on, I think, also integrate or implement the guide. Now, you concluded actually with the monitoring and reporting, which is one of the very important areas as well in terms of, implementing the guide, which is actually one of the key success factors when it comes to sustainability integration. And actually that requires continuous monitoring and impact assessment to achieve or to assess actually the achievement of the banks when it comes to environmental, social impact in general. Now, let me move to Dr. Adriana. You have a very rich experience actually through the Global Alliance for Banking on Values, and also looking into the various initiatives I think Mr. Casey mentioned at the beginning. So from your experience, how significant is monitoring and reporting to promote a better impact of this guide?
Thank you very much, Dr. Talal. And let me also join our previous panelists to thank CIBAFI very much for this invitation, and also to congratulate the group developing this guide. I think it's a very important milestone. In terms of the question you've asked, placing social and environmental sustainability at the core of banks and creates really opportunities of growth, but opportunities of sustainability and impact. So why does monitoring and reporting matter? It matters for a number of reasons. And what I'm going to share with you are the experiences of values-based banks, which are members of the Global Alliance for Banking on Values, amongst whom we have an Islamic bank, Bank Muamalat. Reporting and monitoring reporting matters because it provides proof points that the organization is making progress in its sustainability objectives that are referred in the guide as sustainability focus areas. And it also can inform course corrections. It also is relevant because it supports accountability before all stakeholders. And importantly, and something we don't really think so much about, it can actually inform public policy and investment. So consider, if you are calculating the emissions that you're financing, disclosing them, and setting a net zero, public authorities can understand where they need to target their investments, perhaps in development of infrastructure, to support those transitions to a low carbon future. So there is feedback loops happening through the monitoring process, the reporting, and the communication. So what can practitioners do? So let's think of monitoring and reporting as one of several stages in the integration of sustainability. This is something that the guide suggests very clearly, and that is practiced by many institutions around the world. So there are very valuable examples that we can build on. In this case, sustainability is not an add-on, but permeates all aspects of banks' operations and product and service development. So how it all fits? Well, we have heard now sustainability needs to be aligned with mission, vision, and reflected in the strategy, indeed. But let's look at monitoring in particular, and let me give you an example. One of our financial institutions in Italy, Banca Etica, has developed what they refer to as impact appetite framework. During the assessment of clients by the credit department, they collect data on social and environmental aspects of the client organization. And then in doing this, they assess ex ante and not ex post the impact that they will be creating if they grant that investment or loan. In this way, from the start, what is clear is not only the intention of the credit, but the likely consequences that it might have. And this is therefore factored into the decision-making process. The process flows all the way through the units of the organization. This is something that has been already reinforced by previous panelists, including the board, which monitors not only a risk appetite framework for the organization, but also an impact appetite framework, which triggers action by the organization if those objectives are not being met. In this sense, then, monitoring is not about risks, but also about opportunities. In this sense, it is not about avoiding harm, but it's also about actively doing good in a coherent manner, integrating it throughout the organization. And it can also drive further organizational transformation. And I think this is a point that the sustainability guide is making clearly. When you integrate sustainability through these principles, you are driving organizational transformation and you are creating opportunities. And monitoring is one of the many steps required to make this transformation a reality. So both the intention and the consequences of a loan are important. Professor Asutai mentioned this earlier. So making monitor integral to co-workers is also part of these guidance. It's also relevant for the sustainability journey. So when monitoring is relevant to all stages, for example, from the definition stage, what is it that the bank wants to advance? What are the sustainability focus areas? Contextualized, as clearly stated previously, based on the national determined contributions, the sustainable development goals, objectives of your country, of your region, then it is possible for the co-workers, for the employees to have a common set of targets and objectives they're working towards, understanding how it matters. In the design of impact, the how is also an important element of monitoring. If you design from the beginning that you are interested in advancing impact directly through an investment in a project, possibly renewable energy project, that is one way in which you are opting to advance sustainability. It is an intentional decision through your direct investment. But you may also decide to advance positive impact through SMEs, and therefore you are indirectly advancing sustainability focus areas. All of this is relevant in how you monitor and what you monitor. And the monitoring also happens at the implementation stage. And the reason this is important is because how do you advance sustainability? It matters for the achievements that you are pursuing. So if you have exclusion list areas where you do not finance, which are very much part of Islamic banking, it is there one step in the journey towards sustainability. There are also other ways in which you are doing this by implementing processes and policies that ensure the integration of the objectives of sustainability that have been set up and the accountability, as I mentioned, on the board. Digitalization was mentioned earlier, and I want to bring it up here briefly because digitalization is a tool for the advancement of the integration of sustainability. For example, we have an institution, microfinance in Ecuador, Banco Solidario. They have developed an application that allows them to track the impact they're having on the clients that are remotely located and who are typically not operating in the formal economy. And through this application, the use of digitalization is actually enabling them to serve better and to nurture those clients for greater well-being. So the sustainability guide articulates in many respects a vision of the future, and it gives the financial institutions a compelling reason how they are contribute and can contribute to the realization of that future through their financing decisions. And that requires, therefore, and it also mentioned, the need to educate all stakeholders. So communicating the impact that you are generating through all your activities, it is what will make it also actionable for other stakeholders. So let's just consider the sustainability guide, how it has proposed that you should communicate both quantitative and qualitative information. The GABB has a scorecard that is also recognizing the value, and we also heard about the importance of storytelling. But sustainability disclosures are not just about putting out a lot of information without context. For people to act on this information, it is essential to translate the data into some element pillars. So let me give you an example. If you provide financed emissions of greenhouse gas, it is not enough for a reader to know what that means for them. What is the impact of that? If you are focusing on the type of water usage that your lending is driving for, it is not important or relevant to say what it is that how much water you're using without a context doesn't speak to it. One of our members in Germany, and with this I conclude, has really completely turned around the sustainability reporting and made the tracking of its lending, translating this into what they refer to budgets on the socio-ecological characteristics that the earth can carry. And through this, they monitor, for example, the use of water by one of their clients, and information from the United Nations Research Institute that has helped them to recognize what are available budgets of water in the region in which the client operates. And through this, they can work and together with the client in partnership and other institutions in the community to address potential overshoots in the available water levels of the region. In the integration of information on the environment, also on society, communicating with clients and reporting this is essential for the success of the journey that the guide is seeking to advance. And let me stop here. Thank you very much.
Thank you very much, Dr. Adriana, for these very thoughtful remarks, and I think for sharing also your experience with the institutions, I think, from the conventional markets. And we hope to also create that knowledge sharing platform in the next months through this guide, and hopefully perhaps in the next year's annual meeting would have more case studies to share on the successful implementation of the guide. And very interesting thoughts that you mentioned, which were also some of them reflected in the guide, which is the ex-ante impact assessment. That's very important in aligning, of course, the sustainability considerations with national development strategies and challenges. Also, one of the interesting points I really appreciate, and I thought it's very interesting for institutions to look at, which is that this guide could also inform policy making, and policymakers would be one of the key stakeholders actually for the successful implementation of this guide. And also you mentioned opportunities, which is extremely important. That I think the mindset a few years ago was that sustainability integration is costly and it's challenging. However, if we look at it today, it creates more opportunities for financial institutions. And we've seen that institutions that actually take into consideration sustainability objectives, ESG objectives, etc., they broaden their customer and investor base, and they're no longer only targeting, let's say, Islamic investors, but also a growing investor base of impact investors. So we'd really like to emphasize on that, and thank you for raising these points. And we hope that the Islamic banks look at also this guide as a source for opening up, other opportunities for them in the global sustainable finance landscape. And that brings me to my next question, which I would say perhaps would be the last questions of this panel, and will be directed to all the panelists. If each panelist can take about 2 minutes, since we have about 10 minutes to finish the session, to reflect on the question, which is how, now that the guide is launched, so how Islamic banks can benefit or leverage on this guide to position themselves in the global sustainable finance industry, and what could be the key enabling factors, if you were to think about 3 enabling factors that can promote the wider implementation of the guide. And let me start by Mr. Casey.
Okay, thank you. Clearly, the answer to this will be different for different Islamic banks. If you look at the spectrum, there will be some banks that function largely as investment banks for things like sovereign wealth funds. There are some with major retail businesses in countries like Qatar, where you're located. There will be others that are largely doing rural business, say in Sudan. And that positioning will be very different. And I think the thing you start with is, what is your position in the market as a whole? And what does sustainability mean within that kind of business pattern? And I think that's why it's important that we're addressing this from the top down in the organization and placing responsibility on the board to see what sustainability means. Now, having said all of that, I think across a wide spectrum of banking, we can probably expect more intervention from regulators. We can expect them at least to be pushing disclosure onto Islamic banks. And at the very minimum, they need to be ready in terms of that positioning. But I think the other important thing is, how far can they position themselves as making a different and more principled offer than that of the conventional banks? And after all, the biggest criticism which is leveled at Islamic banking from those outside it is normally, look, it's all the same as conventional banking with a few extra bits of smoke and mirrors. And whereas you can make structural counters to that, it would be very, very good if it also conveyed that it is actually based on principles and values. And I think that's the piece of positioning that's going to be critical for the Islamic banks.
Thank you very much, Mr. Casey. And now let me move to Professor Mehmet.
Thank you. I think Peter has highlighted fantastically. There isn't much to add to that. My major concern here, it is very normal that we could have gap between the knowledge base, the cognitive knowledge, and the practice. That's common. But what I feel that Islamic finance has to move on to reduce that gap to the possibly acceptable level. Currently, that gap is huge. In other words, you have this amazingly beautiful philosophical foundation through which Islamic finance emerged, because Islamic finance emergence is through the knowledge base, revealed knowledge. But somehow, when we look at the practice, it can be very brutally finance oriented. And that gap is something that we want to overcome with this sustainability guide, saying that, look, we understand that market conditions are important for you, but at the same time, the original emergence is very much related with this particular knowledge base. We have to consider that knowledge base and looking at the market condition and the knowledge base and considering and heavily identifying the importance of knowledge base. I think Islamic finance has to move into that direction, reducing that gap as much as possible. And for this, I think one of the missing elements in the operation of the Islamic finance industry is the civil society. And that is because civil society has shifted the responsibility to, unfortunately, to Sharia scholars, because they think that that provides the legitimacy. And therefore, we have to get our Sharia scholars to understand the importance of sustainability issues, because civil society is not acting, they left it to them. So we have to create this awareness in the civil society one. Secondly, we have to get our Sharia scholars to understand this particular emergence in front of us, and therefore they have to consider in providing this legitimacy, they have to internalize the sustainability issues in the process. I think beyond that, of course, we understand the field, capital, and habitus plays an important role depending on what kind of Islamic bank and operations. But beyond all those differences, there is this line. That's the Islamic position in relation to all the stakeholders. I think we have to essentialize that, and Islamic banks now have to move on to stakeholder-based understanding rather than just the essentialization of the market condition. I'll leave it with that. Thank you.
Thank you, Professor Mahmoud. And of course, the stakeholder perspective is very important. And moving now to Professor Akram Ladin, maybe briefly in 2 minutes, building on your initial thoughts.
Yeah, I mean, just to add, I think from what Peter as well as Mahmoud have said, that I think from my point of view, engagement is very important, you see, and looking at the reality on the ground, because different jurisdictions might have different needs, different jurisdictions might have different kind of orientation, and some of these areas, it has been there. Take, for example, for us in Malaysia, I mean, the Central Bank of Malaysia has been pushing for the VBI, value-based intermediation, to a certain extent. I think it is important, you see, an engagement to see that how the guideline that the CIBAFI is having can complement, you see, what is being done in the in certain jurisdiction. That is important, and I think, as mentioned by the Mahmoud, it is the awareness among to the Sharia scholars. And I would love, as I mentioned, if the process can be integrated into the Sharia decision-making process. I think that will, to a certain extent, you see, I mean, the guide, how the guide can, you know, can be can benefit the Sharia scholars, you see, in their decision-making process, and I think the sustainability committee and whatnot. I mean, these are the practical things that we need to put into practice and tell people that where you should start from. I think that is important because I mean, some people might look into the guide as a general guideline, you see, but some might think that, well, okay, I mean, I have this guide now, so but where do I start? You see, what is the step that I have to follow and whatnot. So perhaps, I mean, those details might come at a later stage. Thank you very much.
Thank you very much, Professor Ladin. And Dr. Liami, I think you have mentioned very great points earlier. So to conclude, what would be your perception or your view on positioning Islamic banks globally in the global sustainable finance landscape?
Well, first of all, let me say that sometimes it's easy to go first. So Peter was lucky to put this nice response, which is really concrete. But 3 points came to my mind really. First of all, and I'm talking about at the institutional level, the organizational culture. Second, the accountability. And third, the reporting on sustainability. So, and I think these might be some sort of enablers. So the Islamic bank need to have the culture of, it's not only financial gain and purely financial investments, but also its development, contribution to the community and society. If that's there in the mind of every single employee, that will really boost and enhance the sustainability. Second, Islamic banks and any other, Islamic institution are accountable for their, stakeholders, shareholders, and also for the community. I'm not accountable of being, good in financial investments purely again, but also to provide something to the community and society, be it, contributing to the SDGs, to the national development plans, to the ESG, whatever, but I'm accountable on this regard. And finally, if I'm not telling people, society, community, countries, what I'm doing, it will be missed. So reporting on sustainability is a must. And it's really, from experience, it's really increased the awareness and increase the commitment level. I have the sustainability report for the, let's say, year 2020. So what's next in my report on the 2021? So that will be in your mind all the way until you publish that report. Then from year after year, you will enhance at the organizational level. Thank you very much.
Thank you very much, Dr. Yami. Definitely organizational culture, accountability, and reporting are very critical factors for, I think, the successful implementation of the guide. And that brings me last but not least to Dr. Adriana, as usual, with your rich experience and case studies globally. So what would be your concluding thoughts?
Thank you. I would like to emphasize the systemic coherence and co-responsibility. And let me just briefly say systemic. Why systemic? Because financial institutions of all sizes and shapes need to see themselves as part of a system. Finance is at the service of people and planet. And what this sustainability guide is, it answers many how questions. It gives you an entry point. So therefore, it is an essential instrument to clarifying the journey, even when each institution will contextualize it. Coherence, because we must act, not just say we are doing something. We must demonstrate through monitoring and reporting that indeed we are attaining the objectives that we set. That vision of the future that puts the planet and people in balance. And co-responsibility, because we need participation of clients, we need participation of other stakeholders, regulators, and other financial institutions. It is a competitive environment, but clients also need to ask for sustainable projects, and also co-workers need to do so. And educating through transparent reporting is one way in which we can all agree that these steps are urgent and definitely not something we can choose not to. So let me stop there.
Thank you very much, Dr. Adriana. Very concise, yet very informative. With this, we have now, I think, reached the end of this panel session. I think a lot of great thoughts were shared during this first knowledge sharing session about the guide. And let me first again congratulate again the financial industry for the launch of this guide, the Islamic financial industry, and also the CIBAFI team for this great work. I also would like to I would like also to thank the distinguished panelists for actually sharing their thoughts and global experience. We clearly spoke about this guide as an opportunity to educate actually the Islamic bank stakeholders, to inform actually policy making, and also to promote awareness about sustainability integration, and to shift basically the existing culture of sustainability as a nice to have into an integrated approach that is much needed today in order to deal with the global challenges that are impacting our economies and the financial industry in general. I believe there will be more to come. I believe the CIBAFI team has more initiatives with regards to capacity building, which they'll be sharing in future. And this is to support actually Islamic banks in the implementation of this guide. Would also like the support actually, and would like to invite all the key stakeholders and pillar institutions in the Islamic financial industry to support the implementation of this guide, and to build on it with future, hopefully, initiatives that could further position Islamic banks in the global Islamic sustainable finance landscape. Thank you very much. And then, assalamu alaikum, everyone.
Thank you, Dr. Dalal,
Very much.
and our distinguished speakers for this very interesting and interactive discussion. Ladies and gentlemen, we have now come to the end of the webinar on CIBAFI Sustainability Guide. CIBAFI would like to thank you for your active participation in this webinar, and we look forward to you seeing again in our future events. Please visit the CIBAFI website and follow us on social media to be updated on CIBAFI activities and initiatives, and for the issuance or release of the CIBAFI Sustainability Guide for Islamic financial institutions. I would like to say thank you once again and stay safe. Assalamu alaikum wa rahmatullah.